Hey everyone, Chris Versace here. Thank you so much for joining us on this latest installment of the What Does It Mean podcast. We are post-election, and man, everyone is trying to sort out what is going on, not only with where the White House will be going in 2025, but also what's ahead for the Fed. Are we going to see as many rate cuts? And by the way, before you know it, it will be the holiday shopping season. Are we getting Santa or the Grinch? Stay tuned. Bob Lang, Lindsey Bell, and I are going to break it all down. All right, everyone, let's kick back and get into this latest edition of the What Does It Mean podcast. Bob, Lindsey, how you guys doing? I'm doing great. I'm happy we're past the election now and all that nonsense is over and we can just move forward and start talking a little bit more about the economy, the stock market, and even the holiday season coming up. So I'm ready to move on to bigger and better things. How about you, Lindsey?
I feel the same way. I'm glad we don't have to guess about who's going to win the presidency anymore and what it means for the sectors. We've got an answer now. Now we do what we do best, right? And that is analyze where we go from here.
I totally agree with you on that, with that point, Lindsey. But on the other hand, we don't necessarily know what's going to happen to some sectors, right? There's a lot of speculation out there. The stock market catapulted higher as soon as we found out that Trump became president-elect. And now the speculation begins on what types of policies may be put in play, what sectors he may influence or not, tariff use or not, all these questions. And I suspect that we're going to see a fresh round of uncertainty hit the markets before too long. As we're sitting here recording today's episode, Bob, and if we look solely at the RSI or the relative strength levels for the S&P 500, the NASDAQ composite, I mean, they've had a great run over the last several trading days, and they're starting to get a little, I don't know if I'd say frothy, but certainly bumping up against those classic overbought levels. Well, it's hard not to call it frothy, Chris, because when indices are at new all-time highs, there is an element of froth and overbought here that people are identifying with. The problem is that there's a whole nother class of investors and traders who are going to be suffering from FOMO, which is the fear of missing out. They've seen the markets go up for the past 5, 6, 7 days, certainly since the day after the election, we had that monster rally on Wednesday. And it's been continuing on. And I think there's a lot of investors and traders out there that are saying, okay, it's gone up a lot. I'm just going to wait for it to come back in. And when it never does, you start seeing these people trying to scrape their way back into markets. And it becomes a very difficult dance for somebody to get in there. And there's that whole psychological effect, Chris, that, oh my gosh, what if I'm the last one in and the market just tanks right as it's getting in? So Lindsey, as a fellow fundamentalist, I have to ask you, right? You see the market overbought. There is this potential for uncertainty as President Trump starts naming cabinet members and speculation over what policy might be. But we're also in the seasonally strongest time of the year for the market. November, December, you know it, Lindsey, that is some fat times for the market. So how do you sit there and kind of architect, okay, here's where I'm going next?
Yeah, I mean, it is the best time in the market. I think what most investors, advisors, everybody, individuals are asking themselves, and I think what you're asking me is, and Bob, is has there been a pull forward of the 6-month strength that we typically see from November into the early part of next year? And I do think, we talked about this last week, I think that the Trump presidency, red sweep Congress, really has been a game changer for corporations and for markets. And while there is still pockets of uncertainty with regards to tariffs or what exactly is happening with tax policy, I think in general, businesses understand the general direction. And what I think it means fundamentally, Chris, is that we've got right now the S&P Capital IQ consensus estimate for EPS on the S&P 500 is $271, which is 13% growth in 2025.
Big numbers.
That is a big number, but it could potentially go higher depending on what happens with growth and taxes and all these things. And I think that investors are willing to bet that that number goes higher. The likelihood of that going higher is higher than the likelihood of it going lower.
Yeah,
so,
no, The probability. Yeah, no, I totally hear what you're saying, Lindsay. The only thing that makes me just a little nervous is that as it appears that we do get the red sweep, I know we're getting the final tallies for the House, but what we've seen from the stock market over the last, I want to say 18 months, maybe a little longer, is the expectations seem to get really ahead of themselves. And we've talked about that a number of times when it came to Fed rate cuts earlier this year and how they've slowed. And I just wonder if the market might be getting ahead of itself thinking, man, Trump policy, it is all clear, wax up that floor. We're going to slide right down. Things are going to pass. Woo, here we go. When I see that type of over enthusiasm, I get a little nervous. So Lindsay, let me ask you, sorry, the numbers that you gave out, 271 on earnings. That means that the current market is trading at about 22 times next year's earnings. Does that make you uncomfortable at this juncture?
It doesn't make me uncomfortable because I think if you expect earnings to go higher, that should come down. But it's also below the peak that we saw during the pandemic or just a couple years ago.
Time out. You cannot use that. You cannot use that. I'll tell you why. Because at that point in time, during the pandemic, the EPS was falling like a cliff. Same thing we saw during the Great Recession. So those are apples and oranges, Lindsay. You can't use those. Come on.
Okay. Well, let me just correct myself here. What I want to say is that it was last 22 times in January of 2022. Okay. Well, actually, we hit it in July of this year too. And now we're back up there. The whole point I want to make is that, first of all, that multiple is going to come down as earnings go up. Second of all, the multiple, if you look at the historical average, 16 times, 18 times, depending on what range you're using, that also assumed that technology was a smaller component of the overall index. Technology has higher margins, higher multiples. And so by some extent, you got to believe that the historical average multiple is a little bit discounted than what it should be. Every industry has some level of technology. And when you think about AI and believe in the revolution, the productivity that could potentially be coming, somewhat of a more elevated multiple than that could be reasonable. I'm not saying there's a lot of wiggle room here in this multiple, okay? I'm not saying that we could go to 30 and there's no problems on the horizon. I do think that the market could take a pause. We all know the market doesn't go up and to the right in a smooth line. It does over a long period of time, but there are definitely hiccups and pullbacks along the way. And I think that we could see that. But what I will say, and I'll end on this point, is that when you do see momentum in the market, like we have seen, and Bob probably is going to have something to say about this, but the market's up more than 20% as we sit here in early, almost mid-November, right? Well, when you look at history, that type of performance, momentum begets momentum, right? And when you see that type of performance, the strength typically will continue into the end of the year. There were 17 other times where we saw 20% gains through November 8th. This was a bespoke analysis, by the way. The rest of the year gain averaged 3.3%, with positive returns 15 of 17 times, so 88% of the time. And the last time there was a down period into the end of the year after the beginning of November was 1938. So the probability of continues to move higher into the end of the year is it's a good thing. But like what sectors? I mean, you've got what? Regional banks up 15%. You got small caps up 10%. This is all in like 5 trading days. So
yeah. Oh, this is why I said when we see such pronounced moves like this, I get a little, I won't say scared, but I get a little suspect, a little nervous. Meanwhile, we are architecting for where we want to be, but let me pivot the conversation here real quick. Bob, couple things kind of coming out of last week. We've seen this real rapid rise in crypto. We know that President Trump was kind of backed by a lot of crypto dollars. Wink, wink, Elon Musk. What do you make of this?
I think it's fascinating. I did a little bit of analysis on where the votes came from for Kamala Harris and for Donald Trump. And it appears that a lot of the younger voters, some of the first-time voters, Chris, 18 to 25, 18 to 30, across all demographics, were out there supporting Trump this time around. And I think it's directly related to the money that was spent by crypto and Bitcoin investors, because Donald Trump came out in support of Bitcoin. He doesn't need to say, yeah, I support it. He was this just 6-7 years ago. He said it was worthless. But now he's coming out in support of it, and he got a lot of money filling his coffers from these investors of crypto and Bitcoin. They knew where their bread was going to be buttered, and it was with him. This is the first time we've seen this sort of group as an influencer in an election, either in a midterm a couple of years ago or even in the presidential election. So it's fascinating to see the influence that this group had in the results of the election. So we'll see what happens going forward. I mean, certainly the young voters are very excited about the future with crypto and Bitcoin. And certainly since the middle of October, Chris, Bitcoin's up about 33%.
It's been a huge move. And I suspect there's some speculation that as the SEC chairman Gensler is moving on, let's say, under Trump, there might be somebody who's a little more crypto friendly. But Lindsey, there's this other thing here that on the one hand, okay, crypto money came in, but what about how people were just, we talk about how good the economy is from an economic data perspective, right? But when you talk to people on the street, and there's some polling data out there between Harris and Trump, it really seemed that folks were not feeling it, or to quote McDonald's, they were not loving it when it came to the economy. Do you think it was this level of dissatisfaction that helped put Trump over the top? In other words, as Bill the Big Dog Clinton said a long, long time ago, hey, it's the economy, stupid.
Yes, exactly. I don't think these under 30-year-olds were only voting for Trump because of the potential for Bitcoin, even though they have a strong interest in it. But it is really the economy. I think what a lot of folks thought in 2020, which, by the way, the market popped back then, might have been due to vaccines and things like that. But I think a lot of folks were tired of Trump after that, right? And so they voted Biden, Harris in on this idea that there was going to be a return to normalcy. And from an economic perspective, that didn't exactly happen. The pandemic, of course, didn't help. The supply chain snafus didn't help. But inflation is very, very top of mind for everyone. It doesn't matter what walk of life you come from. Everything costs more than it did. And up until the past year, real wages, they didn't grow. They were negative, guys. They were negative. People were losing money, in other words, based on they weren't making enough to make up for that inflation. So that really has weighed on just the individuals in this country. And I think especially on the younger generations, it was a lot of this, like, people just want to say what they want to say on the internet, and they want to have that type of free. So the younger generations had a lot of different reasons to vote for Trump too. But I think overall, yes, inflation, the economy, even though the numbers overall look good, it didn't feel good in the wallet.
Well, I mean, two things to that. One, we haven't seen real deflation yet across the board. And the second thing, when you think about these younger voters, they aren't like us seasoned vets like Bob and I up in the 50s. We'll be gentlemen, Lindsey, and keep you out of that. But we've seen the cycle of the economy. We've seen presidential elections kind of span out before. And I think if you're a young voter, if you're in your early 20s, you really haven't worked that much. You might be getting your adult sea legs in the last 5-6 years with the pandemic, and all you see is these high prices out there, and you see what's being reported. And it's understandable that you might say, oh man, I can't do this again. Give me something better. Bob?
So I would ask you, Lindsey, do you think that Joe Biden and Kamala Harris were simply just unlucky with the timing, because when they were stepping in, inflation was ramping up and it peaked and then it came down? So obviously, if all you remember is what happened to you recently, as far as the wages are concerned, look, I mean, I get it, and people are dissatisfied with higher prices, but at the margin, I think that a lot of industries, especially union workers, saw large pay raises over the past 2.5 years, especially when some of these agreements were made. These companies had to bend at the knee to these unions and give them what they wanted. And usually, in most cases, it was higher wages. But do you think that they were just unlucky that at the time when they stepped in 2021, then inflation was peaking or starting to peak?
Hey, look, I'm a believer that luck plays a role in a lot of aspects of our lives. It always has a little bit of impact. And I do think that they got a little unlucky with regards to inflation, but they also don't control the wage side of the equation, right? Corporations control the wage side. And sure, there were pockets of unions And even lower wage earners, hourly workers at service places got big raises. Now, they didn't necessarily offset the rise of the cost of living, but they got big raises. It's the middle that didn't really see real wage growth over the last 5 years. And sure, maybe the high uppity end also saw increases. And so I do think that they got a little unlucky. And I do think that we live in a free economy, right? And so it's not just up to them. I think that there's a lot of things under the surface changing, but inflation is like the one thing that you can grasp onto because you can see it and you feel it every day. And even if the rate of change comes down, and maybe the Harris campaign could have articulated a little better that it went from 9% down to above 2%. So we're moving in the right direction. I don't know if that resonates with individuals, though, that have to go to the grocery store every week.
Well, let me say this, then we'll wrap up the segment and move on. I was at the grocery store yesterday, and I was shocked at what my bill was in a good way because of the number of sales and other deals that were unfolding. Where I do not feel it is when I go out to eat. And what used to be $40, $50 is $80, $90. And let's not even get started about the prices for adult beverages and cocktails, because that's off the chain. I candidly wonder if we will ever see deflationary forces there.
I would just add on top of that too, eating out, which everybody enjoys doing now. It's a social thing too, right? But like, think about property taxes, guys. Those went up substantially because the value of homes went up. Well, that cuts into your wages, right? Auto insurance, we've talked about, goes up. Home insurance, all these benefits, the cost of healthcare has gone up significantly. Those don't get the headlines, but they are impacting the amount of money that everyday Americans have to spend. So it's a tough time for sure.
All right. So let me just wrap up because we're so excited by today's conversation that we're kind of bleeding over into topics. So let me back us up a little bit and just say that as we wrap up the notion of the election aftershock, right? We've seen a huge run in the stock market. The question TBD, I think, is will we see candidate Trump enact potential policies that he boisterously discussed on the campaign trail? I think we're going to have to watch the tea leaves of his cabinet posts and other comments that are coming in the balance of November, December, because remember, he's not really into office until early days of 2025. We're going to have a lot of work to do, which means you folks out there listening will want to keep coming back to get our thoughts on where all this is going and what you need to do. But let's segue to our second topic, and it's one that we were bandishing about, which was inflation. Just to quickly recap, we are going to get some October inflation very soon. The data that we saw August, September, depending if you're looking at core PPI, core CPI, either sticky or moving in the wrong direction. Expectations out there are for more of the same with the October CPI and PPI and their core data points. But as Lindsey was just saying, man, oh man, there are a lot of factors that are likely to keep inflation sticky. Let me continue with you, Lindsey. As we think about that and get ready for the data, as you kind of think back on what Fed Chair Powell had to say last week, fewer cuts? Are you worried about a December rate cut that the market thinks we still might get?
Yeah, I mean, but there's a third of a chance, 1 in 3 chance that we don't get a cut in December. Yeah, I mean, I think I've got the mindset, I've talked about it here, that inflation has been sticky, especially the shelter component. You do see it coming down slightly year over year, but it's still hanging around that 5% year over year increase. And so I think and I just listed out a couple other areas that have been quite elevated on a year over year basis still, and are significantly up since 2020. And so I do think that with President Trump, we talked about before, we don't know exactly what his policies are going to be. We know about tariffs, that's inflationary. There's taxes that obviously the corporate tax rate is going to at least stay where it's at. It might go lower. These are all things and other spending areas. These can all be very inflationary. We've got a U.S. debt load. What is it? 37 trillion now? Where are we at?
I try not to go to the scariest page on the internet, which I don't know if you agree with me on this, Lindsey, but it's usdebtclock.org. Scariest page on the internet. And Lindsey, when you were saying a second ago that tax rates might go lower, were you thinking or seeing a conversation around a 15% level for corporate tax that I saw?
Yes, exactly, which I think is just crazy.
It is crazy, but that is sure one way to have your S&P Capital IQ consensus 2026 EPS numbers really bounce higher.
Yeah, but who benefits from that? Do employees or do shareholders?
Shareholders.
Bob, next time you're going to do that, you got to buzz in. All right. So Bob, Lindsey has listed a number of factors that said, yeah, inflation might be sticky. Do have a question for you. What's going to be more important this week? Is it going to be the October CPI and PPI data that we get? Or is it going to be comments from the big dog himself, Fed Chair Powell, Thursday afternoon?
I think the comments from Powell are going to be very important. But in addition, Chris, I think retail sales coming out this week is going to be...
Okay, let's stick with my question first before you go somewhere else. So are you saying that Powell's comments will be more important than the CPI and PPI data?
Yes, I do. I think last week's press conference was pretty bold by Powell saying that, listen, you know what? We're on a path here. We're going to let the data speak to us. And he's going to have this data in hand, as we all will, when he's ready to talk. And I do think that what he says is going to matter a lot more than what the data is going to give us. I think we're looking at about, a 0.2 on the CPI for month over month. And that's not necessarily an improvement, but it's certainly the core number is looking to improve on the estimates. But to your point, I think listening to Powell is going to be the most important thing.
Yeah, actually, the core inflation month over month is unched. That's the expectation, 0.3. And on a year over year basis, 3.3% is the expectation as well. So to Lindsey's point, still sticky. And what's interesting, and I know some people do this mental math, but if you take the core rate and you multiply by 12, that's actually 3.6, right? I think you need to be a little careful. And it was kind of interesting what Powell said last week, that they're increasingly looking at a trailing 3-month number. So I think we'll have to take a look at that when we get the data, both Wednesday, Thursday, CPI, then PPI. But I agree with you, Bob, and I'm not trying to push back on you, but I was really curious as to what you had to say. I agree that it's Powell's comments and the language he uses, how he says what he says, is going to have the market kind of hanging there in anticipation, much like Lindsey does when she can't get the ketchup to come out of the Heinz bottle. Anticipation, waiting. Lindsey, do you agree with that?
Yeah, I mean, I'm from Pittsburgh. I'm not even good at getting that ketchup out of that bottle.
Do you know the trick? Total sidebar. Do you know the trick with the 57 on the glass bottle?
Yeah, I know it. I buy the squeeze bottles.
Yeah. All right. So, Bob, I don't know if you know this, being a original California native, on a Heinz glass bottle, if you can still find one, there are some key points where they have a 57 in the glass. And that is where you're supposed to hit the 57 with the palm of your hand to make the ketchup come out.
I didn't know that. That's new.
That's because you're so mired in red vines and what's that place? Oh, the burger joint, not Five Guys. In-N-Out. In-N-Out. There you go. All right. One last thing that we didn't talk about, I just want to get your guys' takes on it. Lindsey, you said, yes, tariffs could be inflationary. Lower tax rates could be inflationary. What about this saber rattling about immigration and deportation? Does that have the potential to be inflationary at all?
So it's a double-edged sword, right? We need immigration to help fuel the economy. But the more immigrants you come in, they're going to take lower wage jobs. So if all the growth, what we saw in a big chunk of this year, a lot of the job growth came from immigrants. And so that lowered wage growth. But so if you have less of that, you're going to have to pay for potentially lower wage jobs. You're going to have to pay more for domestic candidates, right? So that could push inflation higher. So yeah, so I think it's a double-edged sword. We need immigration from an economic perspective. That's what this country is, right?
Oh yeah. But I think the concern is that if we don't have people coming into this country taking these low-skilled jobs, there's a lot of folks that, right or wrong, they won't do those jobs for those wages, which companies might have to pay up to get people to do them. I mean, I can't tell you that I'm going to break down and go pick strawberries. I just don't think that's going to happen. But again, I think it's another thing that we're going to have to watch to see if inflation is not only remaining sticky, but if it potentially moves the other way and what that might mean for the Fed policy.
Lindsey makes a great point. It's the trickle-down effect from the immigration that is extremely positive for the economy. And I think people coming into this country, even if they come in illegally, it's not a good thing, but still they do tend to provide a service. I'm not endorsing that as a policy here, but being from California and knowing that there's a lot of farmland out there and a lot of immigrants come in from Mexico or elsewhere to do work that most Americans won't do, right? And let's just face it, there's some jobs that Americans won't do where these immigrants will come in and do the jobs because they're going to get paid better wages than they were from the countries that they were originating in, maybe in Mexico or some other place. But the trickle-down effect here in the economy is absolutely essential. And if that stops, I don't know, it's going to be a huge logjam. They're going to have supply chain issues, much like we had before in a different area, and could cause a lot of chaos.
All right. Well, let's wrap this up kind of differently. I'm going to ask you guys rapid fire. Quick question. Lindsey, inflation, sticky or further progress ahead? Quick.
Sticky.
Bob.
Sticky like peanut butter in the roof of your mouth.
I'm just going to add one quick point. We also heard from one current Fed person and one former Fed person, Kashkari and Loretta Mester. They both are saying that there's going to most likely be less rate cuts next year than is anticipated, or at least than Fed plot. Let's just say as the Fed dot plot, the 4 cuts expected by the Fed dot plot could come in.
I agree with you on that. I think the consensus of the CME Fed Watch tool says that there's only 4 rate cuts left between now and the end of the year. Now, 3, I think it's 4, but we'll take a look. It doesn't really matter because what matters is what does the market think by Friday? So let's move on. Last question of the day, or last topic of the day. This is going to be a quick one because we've been jawboning quite a bit today. But Bob, holiday shopping season, we're almost at the mouth of it. Granted, we saw some pull forward in October with Amazon's Prime Big Deal Days. We'll get a sense of that with the October retail sales report you tried to talk about earlier. But here's my question. Who's coming, Bob? Santa or the Grinch?
I think Santa Claus is going to make his way to Christmas time, Chris. And I know that there's a possibility that there's going to be some disappointment, especially at the retailers with the type of products that they have and the sales that are out there. But I have a good feeling that Cyber Monday is going to be good. I think the cyber sales, which hit records last year in 2023, are going to hit records again this year. I think a lot of people, you and I, do a lot of shopping online. I think we're going to see those numbers explode. And I think there's a lot of great new items, new products out there that people are going to want to buy and put under the tree.
All right. So apparently, Lindsey, I have a stalker in Mr. Lang, keeping his eye on how many packages I have in front of my house. Are you favoring brick and mortar this year, Lindsey, or do you agree with Bob that digital shopping is likely to kind of win out?
I do agree with Bob. I'm not sure about your shopping addiction that you allegedly have online, but I do think that, I have family members of friends that are already starting to shop. My mom is like pinging me, what do your kids want? And I'm like, I don't know what they want to buy anything. But
just remember, Lindsey, just remember when it comes to kids and the holiday season and grandparents, the list is life.
I know. So I had to get on top of that. But I do think that the retailers are going to do well this holiday season. And I think what has changed, in my opinion, and Bob and I think we talked about that, and you talked about this a couple months ago, is the potential for discounting into the holiday season. I think discounting will happen, but I don't know that it's going to be as significant or as sharp as I initially anticipated, because it's going to be interesting to watch the consumer confidence surveys, consumer confidence and sentiment, now that Trump is heading into the White House. And if there's any impact there, because if there is, it could mean more spending this holiday season too. So yeah, I just think it's going to be a good holiday season. The other thing I would say about not just the Santa Claus rally or the end of the year rally, but also over the next 6 months, is that you typically do see there could be this opportunity. Small caps do well, but developed economies, emerging markets could also, I know there's the whole China thing, but those are areas within the market that people may be underexposed to at this point in time that could have potential to rally over the next 6 months.
Lindsey, I think you just gave us a topic for one of our next podcasts. So let's put a pin in that, and when we come back, we'll wrap everything up. All right, Bob and Lindsey, as I like to say, let's put a bow on this week's episode. And I kind of hinted at it, but we were so enthusiastic in our conversation today that we almost lost track of time. So let's keep this real quick. Let's start with Bob the Counselor Lang. Counselor, what stood out to you in our conversation today?
He was talking about the holiday season, the retail, of course, and Lindsey made some great points about discounting and how that is going to affect holiday sales and interest in holidays and the fact that people are getting started early. It's not even Thanksgiving yet, and people are still getting out there starting to shop. So that pretty much had a good impact on me, and ending the podcast in a nice positive way is always nice too.
I agree. I don't really understand why folks in the neighborhood that I live in already have Christmas lights up, Christmas trees up. It's not even Thanksgiving, but Lindsey, what stood out to you during our conversation today?
I know Bob just ended on a positive note, but it could go maybe slightly the other way. I think what stood out to me is that we had a major event uncertainty in the marketplace resolved with the election, but there still are some uncertainties. So again, it has been an exuberance in the market in the last week or so. And I think it's just a good reminder, Chris, I think you did a good job of reminding us and questioning me in particular about the potential for market upside. But there are unknowns about where do interest rates go from here? What is the inflation story? Where does it go from here? What do tariffs mean? What is policy going to be from this new administration? So I think we do have some uncertainty in the marketplace.
Totally agree, Lindsey. And I'm going to leave it there. I'm going to say vivid. In other words, I agree with you. That's going to be my takeaway. And I just rue the day that you host the next podcast because I know I'm going to get attacked. But you know what? That'll make for good podcasting conversations. All right, folks, that's today's episode. Thank you so much for joining us. As always, be sure to take a look at the show notes down below. And if you need anything from Bob between now and the next podcast, march on over to explosiveoptions.net. Be sure to check out what Lindsey is doing with her newsletter, The Shift, and see her very insightful posts over on LinkedIn. As for me, Chris Versace, as always, you can find me over at the Street Pro Portfolio. Thanks for listening. We'll be back with you next week.